Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Friday the 13th, 2015. Okay, so today was like, the best analogy I can give you is it was a sacrifice bunt in baseball. Everybody knows it's coming, so nobody's surprised when it happens. And last night I indicated that the likely scenario into today, leading into the holiday weekend, Friday, the market, the S&P cash index, very close to 2100. It's a psychological level. We're still close. Okay, we're not there, but we're close. I indicated that the market was likely to go a little bit higher. Okay, and that was just a sacrifice bunt. It just shouldn't be surprised that it happened. It is what it is. We've read this book so many times. These type of market setups, we're in an uptrend. The media is looking for good news. CNBC is looking for good news. They're looking to report positives out of Russia and the Ukraine. They're looking to report positives out of Greece and the EU. It's just a joke. But irregardless, the market is made up of people. People want the market to go higher, so it went higher, and that's the way it goes. Don't have to have a reason. It's just the way it is. So it leads us into, where do we go from here? Okay, so where do we go from here is, now I've redrawn the trend line. I had a trend line that went down like this for a long time, and that's really off the table now. The reason why it's off the table is because now it appears we have a true channel. Okay, well, here's what it is. Okay, this is a pivot top. Okay, we went through the pivot top yesterday and today, and what happens is, or went to the pivot top yesterday and through it today, and I believe that this line here representing this pivot top and the high from yesterday will be the line in the sand in whether or not we go higher or come back in and resume a downtrend, which would become in this channel. Okay, and that's why I call this a channel, even though, technically speaking, it's not necessarily a channel yet. We haven't been there because we just got here yesterday. But I'm presupposing that this is going to become a channel, and I'll get to that as the video goes on as to why. So where do we go next week? I believe, and this is really just, this is not technically speaking, this is not mathematically speaking, this is just experience speaking. I believe that Tuesday the market will be slightly higher, at least for part of the day. Okay, we may not close higher Tuesday, but I think we will be higher at least part of the day. They will push the market past 2100 on the S&P, okay, and will remain above 18,000 at least during the day at some point for on the Dow. And what will happen is, if that does happen, okay, I believe, and I can go a little far out on a limb when I say this, I believe Wednesday will be a down day, and I believe Wednesday, if it's a down day, could be a whopper. And I don't mean whopper like 50 handles in the S&P. I mean it could be maybe a 20-25 point down day on the S&P, which would be 2.5 points in the SPY. And what would that do? So where would we find ourselves? We would find ourselves slightly over 110. Remember, I said the market would likely go, if we went through this area, up about another $1 to 110. That's basically where we are now. Let's say we get a little bit higher on Monday and then came down about $2 to $2.50. So let's just say 210 brings us to 208, 207.50, something like that. And that could happen on Wednesday, okay? We'll see if Tuesday's up. If Tuesday's down, that's off the table and something else is going on. But that's what my work is telling me. Let's see if I have anything else in my notes on the S&P. Oh, the last item is, I just want to make mention, and I'm going to talk about this in another market in a little while. You see this 20-period moving average, which is the red line. the market started to get extended a little bit beyond or too far away from, what do we call it, home base. We like to call the 20-period moving average home base because the market likes to stay close to home. Right around, every time it gets far away from home base, it seems to come back to home. Sometimes it gets farther extended than others, right? But we're starting to get to that point where we shouldn't be surprised at this point to see the market start to pull back a little towards home base. Why wouldn't the market just continue higher? Well, because my calculations tell me, and I've been telling you for several days, I don't think the market has the velocity to go much higher through this top here, okay? I said we could get, yesterday or the day before or both, I said we could get to probably about 110, okay? And maybe a little higher, but I don't see us getting much higher. That's not to say it can't happen. I don't see it happening, so that's the way I play. That's what the probabilities are telling me as I read the chart work and I read the markets and I read my different resistance levels, support levels, Fibonacci retracements, longer-term charts, shorter-term charts, cycles, all the rest. And that's what my work is telling me, that we really shouldn't get much higher on this move. And if Wednesday happens to be a down day, mind you, that could be the start of several more days of downside, not necessarily in a row, but we could work back into this channel, and we'll get there when we get there. But that's what my work is telling me. So for now, that's what I have. Hopefully it's helpful. Let's move over to the gold market because I have some interesting info there as well. I've done a lot of calculations over the last few days in all the markets, and I've come up with some interesting calculations in gold, and here it is. So this is GLD, and GLD was up a little bit today. Gold was up a little bit today, which was nice, but what I have next week is a pivot of 1236 in the price of gold futures, which is based on the April contract. Now, what that means is if gold is beneath 1236, there's going to be more as the week goes on. The longer we're beneath 1236, there's going to be more of a tendency to want to go down and test the number I gave you the last few days, which is 1212. If the market starts to close, and when I mean close, first hourly and then daily, over 1236, the market's going to have a tendency to want to get to 1260, which is a nice move, which could be from where we are now about $30, maybe higher, okay? So that would represent about 3 points in the GLD. So on the downside, the 1212 area represents about this level, about 116 in the GLD. And if we were up 3 points from here, okay, if we closed today at 118, that would represent 121 roughly in the on the upside. So you can see we're in the middle here, so I wouldn't be doing anything until I see how the week is developing and how the market reacts and treats the 1236 number on the gold futures contract. And then I would wait for the probabilities to be in my favor and then play it that way. So I think that's all I have in gold for now. That's the short-term view in gold. Okay, so let's move over to the bond market, and I'm going to bring up a chart of the TLT again that I've been bringing up the last couple of days because something, you know, I'm kind of, it's hard to get excited about this for most people, but I'm getting excited about this this bond market. I'm going to go through it because there's a lot of stuff developing, and I'm going to kind of open up the can of worms here to you folks tonight. So originally, I thought the market would come into the this level here, which represents the pivot top here, and I thought we would bounce off this level, and we still may. That could happen Tuesday or Wednesday or something like that. But if you remember from last night, I went to a longer-term picture for you on a weekly chart, all right, and I put in this Fibonacci retracement level, and I showed you that the 382 retracement, which is an important Fibonacci number, is at 124.24. Okay, so what that looks like on the daily chart, okay, is 124.24 is down in this area here. Okay, so I would want to be a buyer down in this area here for a number of reasons, mainly because next week, If we got down here, I think that would mark the beginning of a cycle bottom, a weekly cycle bottom in the bond market, which would mean a multi-week rally in the bond market off this number here. What would that mean to interest rates? That would mean interest rates would begin to come down again. If interest rates are coming down again, there's a likelihood that the market would ultimately come down again because interest rates may be coming down as a result of the market coming down, money running out of the stock market into the bond market, pushing bond prices higher, yields lower. Okay, so let's say that did happen and we came down into this area. We would expect a multi-week rally off of this area. If we went down to the 124.25 in that neighborhood area, I would want to be a buyer of this market. More importantly, longer term. Now, here's the deal. It looks to me like this month we may be putting in an important long-term top in the price of bonds. It doesn't mean anything for the shorter term picture that I just outlined for you for the next couple of weeks. That's not what we're talking about. I'm talking about in the years to come. Nothing goes in a straight line. There'll be years where the bond market is up and years where the bond market is down. The point is that we just came off of a 35-year rally in the bond market, okay? A 35-year decline in interest rates, little by little, sometimes a lot by a lot, but a 35-year rally in the bond market. I think this month may be the beginning of a multi-year, maybe multi-decade bear market in bonds. And that brings up a whole nother scenario in the years to come. We don't have to worry about it today. As it becomes more important, we'll talk about it. I get it. I just want to make you aware of what's developing in the longer term picture, but don't take that for anything that has anything to do with daily stuff and even weekly stuff and in some cases even monthly stuff, because this is something that could be a generational change. Like we saw a generational rally in the bond market. We saw a generational rally in stocks from 1980 to 2000, okay? A 20-year rally, a 2-year pullback, and then another, basically up to 2007. Well, you know the story. The point is that this could be a multi-decade top marked right here from last month in the bond market. So I wanted to point that out. I think it's important, and I think it's going to start to get noticed as time goes on. We'll see. Okay, let's get over to the USO, and I'll move things along here. I know I got long-winded. Okay, so the oil market, let's go back to a daily chart, and the oil market is interesting because it's basically formed its own channel. Okay, here's the downside, here's the upside channel, and if you break out to the upside, you're going to have higher prices, and if you break out to the downside, or at least you start to move down, you probably come to the bottom part of the channel, which is right around the 20-period moving average. But here's another important fact, okay? I talked about a weekly cycle bottom potentially due in the bond market. How about a weekly cycle top potentially due in the oil market next week? Okay, again, next week. Important. Okay, Wednesday could be a down day in the stock market if Tuesday's up. Okay, that's what my cycle work is telling me. Bond market could bottom next week and rally for a couple of weeks. The crude oil market may top next week and have downward pressure for a couple of weeks. In fact, on Tuesday, I'll tell you right now, if the market starts to close below $52 on the crude oil futures contract hourly, okay, it'll go right to 50 and probably a little below, maybe 49.50, 49.75, something like that, if we close hourly below 52 on Tuesday. So watch for that. If we're higher, we're higher. I'm not saying we're getting to 50 on Tuesday. I'm saying if we close hourly below 52 once, twice is probably enough, 3 times for sure, you can look for $50 in the price of crude oil on Tuesday. Okay, let's move it along. What else do I have for you? Actually, you know what? I think that's going to be it. Hopefully that was helpful. I had a lot of information tonight. I know it was long-winded, but hopefully it's been helpful. So we're going to give it a wrap. Have a great long weekend. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.